Okay. So I just thought it would be helpful to provide a training on like self-employed borrowers when we're reviewing a P&L, some kind of like things to look out for to avoid issues. So kind of some tips and tricks on how to best handle that. So um, specifically what I'm going to look at is the income part of it, and then also the customer service part of it. Like, so when customers express frustration or don't know how to deal with it, or I've got some different resource tools that I use that help me. So, and when possible, we will try on the front end to get this stuff. But, since like it's like my thought is there are going to be times when you'll need to request updated documents, when we get further along in the process. So I think being able to make sure, whether we're putting in the file or you're requesting it because it was done wrong or wasn't completed at the time when we submitted it in, I want y'all to feel confident in your ability to look at that and identify if we have an issue or not. So let's start with just the actual income calc piece of it itself. Okay. So the probably the most important part of this that I would say is, let me actually do this, is when we get a profit and loss statement, what you want to do is take the bottom line net income number and compare it to what is the income calc that's already on the file. So for example, if we're looking at this particular file, okay, when this file was submitted to, let me zoom in. Okay, the income. When this file was submitted into processing, the income calc, gosh, where's the 1003? Where's that income? The new ERLA, not as big of, okay, here we go, 6103, right? So we have a base income that we gave for this borrower at 6103, okay? And then let's go to the second borrower, borrower number 2, 3491. All right. So it's 6103 for the first borrower per month that we pre-approved this borrower on, and 3491. Okay. So we'll save those numbers. Then what happened was on this particular file, we got a conditional approval at on the 15th. Okay. And then the borrower did not get us a year-to-date P&L. We did request it up front, but this borrower was a little more challenging at times, so he didn't finally get it to us still a little bit further on the process. Okay, so when he provided us, we were using a 2019 return, okay, to pre-approve the loan because he had not filed his 2020 return. So in that scenario, we had to get a 2020 P&L and a 2021 year-to-date P&L. So the income calc process you will walk through is when you pull up this P&L, if you ever get one, is you're going to take the previous year, take the net amount right here, divide that by 12. So this amount right here is lower than what we used to qualify on. So we know we have an issue. So what I would say is, what I want y'all to do is, if you ever see a P&L and the net income is less, do not want you to put in the file. We need to go back to the borrower and reconfirm. Is this correct? Are you absolutely sure? Because sometimes borrowers don't know what they're doing. And before we put in something into the file that's going to cause an issue, I'd like to have a conversation with the borrower. So when you are processing loans, this is like kind of what do you call a landmine we want to avoid. Okay. And so, because the way the underwriter is going to look at it is, even though the 2019 tax return had an income calc of 6103, if the year-to-date P&L or the previous year's P&L shows lower income, they have to use that. They have to use the lower. Does that make sense? So same here. If we go to our 2021 P&L, okay, divided by 6.5, that one's also too low. All right. So that's the first thing we want to do, is we would then go back. Now, he can use whatever resource he wants to fill this out. Like you can use a borrower prepared. So a sample, let's see here, where do I do sample P&L? Sample profit. Here we go. Yeah. So I've saved this, and I can send this out after the training. So what I'll do is explain to them, like, hey, you can use whatever format you want, but really we're just looking for a bottom line net income number, which is kind of similar to what he did. But we need to explain to him like, hey, Mr. Borrower, if I put the profit and loss in the file right now as it is, your income is significantly lower. Can you confirm? Because then that's going to trigger needing a letter of explanation for declining income, and or that's going to trigger potentially the debt to income ratio may not work. Okay. So the first thing I want you to do is bring it to my attention if you see that and not put it in the file. Okay. Then what we want to do is go back to the bar, have them re-verify that. And then we also then want to look at the bank statements. So if we've got the, hopefully that this COVID overlay goes away sometime soon. But for the time being, we would have to log in and see, okay, hey, here's his business account. We need to see bank statement. We need to see deposits of about $6,000 a month. Well, it looks to me his deposits were $4,800 this one month. Deposits in April were significantly higher, 64, 43. So it looks to me like when me and Tequila are going through this, the guy was making way more money. Look like, or at least I think when we were looking at the deposits, it looked like he's making more money. Like, look, that's $12,000 deposit, 19,000. So year to date, it looks to me he definitely didn't do his P&L right. Like, I mean, he looked like he had 19,000, 12,000 in one single month, but he reported that on the profit and loss significantly less than that. So I'd probably just, try to clarify for him, hey, are you sure you filled this out correctly? Does that make sense?
Yes.
Okay. All right. So the two most important things on a profit and loss is that net income, making sure that matches what's in Encompass. So then you could, take your income calc and compare it to the actual ERLA, or obviously sometimes it's easier just to go back here and just compare it right here. But on this particular file, I see the underwriter dropped it. So we originally at 6,100. And so that's something I wanted y'all to kind of be aware of. And then I can also then share the resource of this tool if that would be helpful. I also have a sample templated email I send to the bar whenever like they're saying, oh, like, hey, I don't know how to do a P&L. So like when y'all send your conditional approval email, I would like for y'all to use my template that states, hey, the underwriter has conditioned us for a year-to-date P&L. This is required anytime you're self-employed and we hit a certain time in the year. And so we're going to attach a sample template, and then we're going to say, hey, if you are confused by this and you're not sure what to do, give us a call and we'll walk you through it. Because I would just tell you that, like, this is one of the conditions that I see when we request from borrowers. It's always the trickiest one. Like, and we always need these on jumbo loans as well. It seems like on every jumbo loan. And in my experience dealing with customers, a lot of times they'll say, they will reply back and get you all the other conditions, but then they like drag their feet on the P&L. They're like, they get a little intimidated or overwhelmed and they're like, I don't know what I'm doing, so I'm just not going to do anything. And so I think we have to kind of prod them a little more like, hey, do you need help? Do you understand the request? Would you like us to give you a sample? And then if they're still not good, then, hey, would you like us to refer you to a CPA or a bookkeeper who can help you with this? Because we have to get it in order to close the loan. And it is one of those particular conditions that if they don't do it right, it like will kill the deal, right? Like all of a sudden we think we're fine and then boom, it blows up, right? So I think when you're looking at a conditional approval, if you see a condition for a profit and loss and we don't already have one, to me, that would be where I would put a lot of your, like when you're going through your conditions, put that one at the highest list, right? And kind of my thought process, at least when I'm looking at conditions, is I'm always trying to pick the one or two conditions that will be the hardest, or the potential deal killing conditions, like condo questionnaires. Like Tequila and I've done training, right? Like if you have a condo, that condo questionnaire is super important. Like when I get conditions like that's one of the ones that jumps out to me, right? Or like if they're self-employed and it's like they have an IRS liability, right? Like to me, those are those particular conditions where I'm like, do we have proof the liability's been paid? Like those are some ones that are kind of top of mind for me. But does that make sense? Is that helpful to kind of give that additional kind of context and resources?
Yes.
Yeah, because you don't want it to fall off because of the P&L being incorrect, or they just haphazardly put numbers in there that can actually cause the deal to die.
Exactly, right. And then if you can sniff that out real quick and just like look at it and you just like do a quick calculation, you look at your net income, divide it by 12, compare that to what's on the Encompass, and if it's the same or more, you're good. Put it in the file. But if it's less, whoa, we hold up. And it's very similar to like if we ever got a condo questionnaire and they check the box for yes for litigation. Whoa, whoa, whoa. We do not put that in the file. We call back, are you sure there's litigation? Because that's a deal killer in most instances. So we want to make sure the information we're going off of is 100% accurate. And then if it is accurate, we need to address it immediately and say, hey, wait a second, Jackson and Tony pre-approved you up front, but your income may no longer work. If you had a huge decline in your income in 2021, like we approved you based on your tax return. If your business is tanking right now, like that is something that we were not aware of, and we have a problem that we'll have to address. Does that make sense? And you can then loop me back in on that, and I'll kind of jump in to help problem solve. Hopefully it doesn't happen too often because we try to do a really good job up front on the pre-approvals, but this is one in particular that I think could bite us. Is that helpful? Do y'all have any other follow-up questions? Would you like me to go into any more detail on any of that?
No.
Okay, perfect. So I will send a follow-up email to this training. I'll include the sample profit and loss. I'll also include a sample balance sheet. So that's not as common, but if we're doing, I believe, an FHA loan, you have to do a profit and loss and a balance sheet, and if it's a jumbo loan. So I have a sample template for a balance sheet and a profit and loss. And I'm like, hey, Mr. Borrower, you can fill it out if you want, but if you don't know what you're doing, here's a sample template. And sometimes even when like if you're doing your Tuesday update call, I would call them and ask them like, hey, do you want to talk through this a little bit? Like the way a profit and loss works is it's simply just your revenue, your expenses, and your profit. So like, for example, if you were a realtor or you were a retail person, what were your gross sales last year? Like, okay, if you had gross sales of 100,000, okay, what were your expenses? Okay, you had 20,000 in expenses that you spent on your business. Okay, that means your net profit is 80,000. Does that make sense? So we don't need you to go super granular. I don't need to give a receipt. We are not auditing you. We're never giving this to the IRS. We need you to give us your honest and best guess at your revenue, expenses, and net profit. And as long as you give us your best guess at your numbers, the underwriter is okay with that. And so that's kind of how I typically go about it. So if you're ever in this situation, come back, listen to this recording, and you can kind of pick up some of my talking points. But I'm also happy to jump on the phone and kind of talk through it with you. Does that sound good? All right, I'm going to hit stop on this recording and